All right, welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So doing the video late here, so I, like a lot of people, was traveling last holiday, obviously the Thanksgiving here in the U.S., and that kind of is a bit of a microcosm of what happened last week. Very typical holiday type price action. You can see here on the SPX. We did have a nice pop on Monday. Really no news, just markets just kind of getting a continued momentum bid. And then, Tuesday, Wednesday, and then, of course, Friday, really just kind of inside days, just kind of neutral to higher. That's kind of the price action that you come to expect for a holiday week, right? Very, very quiet. If we look at the spiders, take a look here. So volume on Tuesday, just 49 million shares, 59 million on Wednesday, and then Friday, half day, under 30 million shares. And again, here on Monday, as I'm doing this video, we're only at 29 million shares, and it's after 2 o'clock right now that I'm doing this on. So very, very quiet tape. Today, I would consider that a holiday hangover session as well. Very typical of when you have a long weekend. You got to figure the market was basically closed for 4 days. No fund manager in their right mind was trading the market on Friday. So the market's basically closed for 4 days. Usually that first session when you come back, markets can be a little sleepy to start off. I think we'll get a little bit more action as we get closer to the rest of the week. We do have some data coming out this week as well. PCE, I believe also Powell will be speaking on Friday. So that is something the market has to look forward to. But from a technical picture here, which is what we're looking at, you can see the S&P, again, still just kind of hammering up against this trend line. We talked about that last week. So all-time high trend line to the July highs. And then obviously we scooped down and now we're right back up here. We are above this gap window here. There is a gap fill at 45.76. We never quite filled that. So that is a possibility. We could go up there and touch that there as well. But right now markets are kind of just stuck at this trend line. And a little bit of a supply zone right there. That was the big reversal. And there's going to be sellers there as we go up and hammer into that price. The question is, do we come up and fill this gap, or do we just drift higher to 4,600? Before coming down to fill some of these gaps. The markets have had a tremendous run over the last couple of weeks, but definitely getting into overbought territory as we've talked about here. Now fund managers at extreme levels of net long exposure here. You can see courtesy of Mayhem there, and again, this is on the Nasdaq there, but across the board, and I talked about this as well on CPI, you probably will see some FOMO here. After we had that big CPI gap, there's going to be FOMO into the end of the year. The question is, does the buy-in kind of stall out here, and then we have to go retrace to fill these gaps? You got 4,400. That's an obvious sticking point there with that gap fill and the whole round number. Or do we inch up here into that double top first before we're doing some more backing and filling? But right now markets are just on the quieter side. Again, just kind of getting over that holiday there, and perhaps some of the economic data this week will tell us a little bit more. We did have 2s and 5s, I believe actually 2 and 6 month bills auctioned off today, and the auction was decent, nothing great here, so that did kind of help the market out to stay stabilized. But in any case, that's the big level that we're watching there on the SPX. For the triple Qs here, you can see same kind of thing. So up last week, and really just inside the last 4 days of that candle from Monday. And again, the question is, do we take this 383 area out and come down and fill this gap and maybe even retrace to this pivot here around 374? Or does this have one more push up and kind of coinciding with that double top there on the SPX first? But again, markets here very quiet, and I would expect them to remain mostly quiet into the end of the year. That doesn't mean we can't have some back end filling, we can't have some sell days, but right now, in an up year, you're going to see that kind of end of year flow come into the market, and I think a lot of those gains have obviously been pulled forward, as we can see. So that's the kind of question here. Do buyers get exhausted, and do we need to do some backing and filling? But in any case, market's holding up right now. There's the Russell 2000. Pattern-wise, not terrible here on the IWM. So we had that big surge a few weeks ago, and we've just been sideways here. I think if this cooks in the oven a little bit longer, the Russell can have one more advance towards the end of the year, but definitely repair the trend. Now, again, much like everything else, we have some fat gaps here that have not been filled. So just be aware of that, and those can act like magnets at times. But for right now, you see the Russell 2000 consolidating beneath these moving averages. And the pattern is okay. I think it just needs to do a little bit more consolidation if it's going to push through that. The Dow here, able to push all the way up. So that was actually really the big winner last week. I believe United Health. Yeah, United Health had a big move last week. And that's going to help out the Dow, the largest component there. But in any case, basically right back to that 355 area. So again, if we go back, there's that pivot going back to April 22. And again, you see we tested that in July. And we pulled back, and now that's essentially where we are. So I'm going to mark 355, maybe 356, we'll say, right in this area here as kind of the next big zone. Again, the question is, do we go and float up to this area, or do we come back down and kind of retest this trend line or fill this gap here before it's all said and done? But right now, again, the Dow just kind of having a little inside day here to Friday's price action, which again is very typical in this holiday type environment here. Anyways, SMH here up 0.25% today. Again, same kind of deal. Had a good bid on Monday, but then 1, 2, 3 down the rest of the week. Nvidia did report earnings, and that did back off a little bit. So nothing crazy, nothing terrible. I can go on about Nvidia for a long time. I don't want to take up too much time in this, but it was a little bit of a sell the news, right? So it's not like the stock's not dumping or anything, but I think investors, even though they crushed earnings, and I figured they would crush earnings, but investors kind of getting to that point where, well, okay, what can you do for me now? I mean, the best is kind of priced in at this current time, and you got to know AMD, Intel, Broadcom, they're coming for that business. So investors kind of just locking in some gains here. That's kind of my 2 cents of this whole thing. But in any case, Nvidia pulling back, and that did bring the SMH down over the last couple of days, but it is still fine right now. Again, short term, if it comes down, it's going to fill this gap here at 156, 156.32, excuse me. And then if we get through that, there's another pivot area right around here, 153 and change. So semiconductors hanging in there okay, and those are the levels that I am watching right now. IGV, again, continuing to hold up. We talked about this level a few weeks ago. There it is. So 381.59, 382. So that was your previous breakdown area from 2021. And then we sliced through that. And now that's getting retested on the other side of it. We did have a nice consolidation pattern and a thrust. We may need to do some backing and filling to get through that, though. You got 1, 2, 3, 4, 5, 6 weeks of consolidation before the breakdown. So it may need to stall out here. But IGV holding up well. And again, downside targets, if it does come in, obviously the gap there and then that pivot at 356. Dow Transports here on the weaker side today. But again, kind of like the Russell 2000, not a terrible pattern. It's sloppy consolidation, but I like how you reclaimed these moving averages here over the last couple of weeks. And I think if it does more consolidation, it can have another run to 15.6. If it comes down, a big negative would be closing below this green bar here. So 14.536 on a closing basis would kind of weaken this pattern a lot, very much so. And then you'd have to look to this gap fill and, possibly back down to this trend line. But transports here, for the most part, are holding up, and, we'll just leave it at that for now. So on to interest rates here. So the 2-year still has that bearish inside bar there on the daily. And we did have that auction today, and the 2-year did have some decent demand. We had a little bit of a tail. It wasn't crazy. But bottom line, you got the red bar, you're inside of that, and I think the 2-year can get back to 4.6 here until proven otherwise. If this closes above the red, so above 5.05, then that picture changes, and I think the 2-year can go a lot higher. But right now, I don't really see anything that's suggesting to the contrary, but this would be your big line in the sand here. It also kind of coincides with that 200-day moving average there, so that's giving you kind of an additional target there as well. And there's the 5-year retesting the 100, or excuse me, the 20 moving average here. This is the 100. And again, same kind of pattern. If this starts to fail, it's going down to 420, maybe 410. But those are going to be your big levels there on the downside for the 5. For the 10, I don't see as much downside for the 10 here. I could be wrong here. Maybe it could get through, get down to 4%, 4.05, I should say. But I still think this area is really good support right now. If this consolidates enough, yes, then it can go through it. But for right now, I think the downside is kind of limited more so on the long end of the curve. And the same thing with the 30-year. I don't see much downside past 4.4 right now, at least in the short run here. So I think the longer end is holding up a little bit better. Time will tell, but that's just kind of, and you can see the level very clearly there, previous double top. And that's where we broke out. So that's usually where buyers are going to step in. But right now, I think the long end is holding up just a little bit better here. Onto housing, so XHB here, flat today. This pattern's actually pretty good here on the XHB. I don't really see any problems with it. Up move, tight upright pattern. I think it just needs to let that moving average, that 20 moving average catch up. Then I think it can go a little bit higher. So I wouldn't rule that out up to 84, 84.50. And then that's really just to that double top there on the XHB. The caveat is you're a lot closer to resistance than you are to support, right? So if you, let's just say you came down and you took out this green bar here, you got all the way down to 77 before you fill this gap. So it's kind of a double-edged sword, but pattern-wise, it looks very good here. And I don't really see any problems, at least at the current time, for the XHB. VNQ finally moving up here. So we got a nice little inside bar pattern there, and that's getting a nice bid. That will have resistance around 81.25. That's really all I'm going to give it the upside bias to for now. Maybe we'll say 82 on overshoot, but a lot of resistance up here. We came down, rallied up, and then broke down there. So that's going to be where the sellers are going to come in. But right now, VNQ's hanging in there okay and actually getting a nice continuation up towards that 200-day moving average. So VNQ looks a little bit better here, and definitely done some repairing on that chart, which was broken for quite some time. XLF also having a decent week last week, kind of got up to that 35, 35.50 area, now pulling back just slightly. Again, this is also overbought. Your next real level here is, again, 35.50, 35.75, that area. If we do retrace, you're going to look for 34.50. So that's going to be that trend line there. Again, remember, hit pivot, we broke through it, back tested, we came down, hit it again, couldn't get through it, and then we just gapped above it. Right, so we'll see if we come back down. That's where we're going to look. So that's where you want to look for buyers to step in, essentially, and defend that level that they gapped it above. If they don't do that, then you got to look back down to the gap fill here on the XLF. KRE, again, pattern-wise, much better than the last couple of weeks. But again, just kind of consolidating against that 200 moving average. There is resistance here. So we do need to do some backing and filling to get through it. But if it does, there's nothing to say this can't go into that 48 handle. So KRE definitely improved much more so. Same thing with the KBE. I like how this is above those moving averages. This could get to 42 if we can get another leg up. Again, I think the market needs to consolidate. We've talked about the spiders. I think if you get some backing and filling here a little bit more, some of these patterns that we're looking at can play out to the upside. XBD, the broker dealers here, again, continuing. So up move, we talked about this little pullback pattern and it got a pop. So nothing crazy. I'm still giving this the upside to 500. And if you kind of work through all of this here, then you can go all the way to 520 and just above that. So broker dealers hanging in there okay. You wouldn't want to see it lose 480 though. All right, energy had a little bit of a wild week. So crude got a nice bounce early on and then kind of faded off of that. The OPEC meeting did get moved to, I believe, Thursday of this week. Yeah, so it's on the 30th. So until then, right now, I would say anything is kind of anything that happens is going to be noise up until then. I think crude probably remains in a range until we get that meeting. I still think it wants to go down and test kind of this upper 60, 68, 69, 70 area at some point, and then I'll kind of evaluate it from there. That could be a buying opportunity, but we'll have to see if and when it gets there and how it gets in there. What would change my mind is if we got back above, you get above $80 and especially above 81.05 on a close, that would definitely tell me that crude wants to go higher. But right now, crude just under a little bit of pressure. We had some volatility last week, and we had some volatility before Thanksgiving. I believe when it was, essentially announced that they were moving that meeting. But that's really all I'm seeing there on crude. I'm not taking any trades on it at the moment. XLE, same thing. It's too sloppy of a pattern. I can't do anything with this. I would prefer to get this in the upper 70s. I'm not sure if it gets there, but that's really what I'm looking at. XOP, look at all this chop too. Lots of it. Again, the big level is down here, right around 128, 130. If we can get there, that could be a buying opportunity as well. Again, it all depends on how it gets in there. Then OIH also holding up okay. This one I like the best out of the three. If it starts to head down, 290 and 280 are going to be good support for that. Uranium here, CCJ continuing to chug higher. So we talked about 45 handle. It got there, and it's just exceeded that by a little bit here. It got all the way up to almost 46. I believe spot uranium actually made a new I think it's a 12-year high. So if we look at, so you got to go back to 2011 here, and it's continuing higher. So 80.75 a pound on spot uranium there. That's a monthly look. But in any case, there's CCJ continuing higher here, up another 1% on the day. I don't know where this wants to go. So, I mean, I've talked about levels here. Who knows? Maybe by the end of the month, it closes back below this pivot and we pull back. Just know that it's very overbought on the monthly. Your next big level, I mean, I would just say $50, right? That's really the best I can give you right now. When something's parabolic like this, it's very difficult to kind of track where it wants to go. It's kind of just blowing through resistance levels at this time. I mean, look at, you had a nice pattern here, a nice kind of like cup and handle type look, but I mean, it only consolidated for what, like 5 weeks to get through this big area. So it's not like it's respecting resistance very much here, but in any case, I'll just say $50 here is your next level for CCJ. URNM can go to double top, so right in that area, right around 52 and change. But again, uranium still on a it's on fire, and a lot of fund managers also, speaking of chasing, a lot of fund managers are piling into the winners into the end of the year, and definitely Cameco is certainly one of those. Anyways, nat gas pulling back again this week here. It's continuing to be under pressure. It is coming off the lows today. There is a contract rollover as well. This is a really good level right here. So we'll see if this can get going by the end of the week. But it came off those highs and we came down here, and we're now through this trend line. We'll see where it ends up by the end of the week. Again, there's a rollover. Sometimes you can get some funny business going on around those times, but if we can get back above 3, then I think this can repair that pattern here. But nat gas still coming in under pressure from sellers into that contract roll. All right, dollar index here. So that did get to that 103 area, and we kind of bounced off of that. Not the greatest bounce though. Retested the 100 moving average and now coming back in. This may want to go to 102.50. I can't rule that out. But right now, until it proven otherwise, it's still holding that 103 handle. We'll see what it does by the end of the week. The weekly close will tell us a lot more. We did go into, a 50% fib, and it's basically hanging on to that right now. We'll see what it does into the end of the week. Again, your next level, again, 102.50. There's your 618, also a little breakout area. So that could be a possibility there on the DXY, but it is under pressure here to start off the week. And again, we'll have to see. The weekly close will tell us a lot more. The dollar has been a tricky trade really all year. Gold holding up as well. So this is still acting very well here. It is pulling back a little bit off the highs today. Again, if you can get through 2025, you can go to 2050. So no real issues here with what I'm seeing with the gold price. We back tested that trend line. If it comes back down again, and for whatever reason, if we do break through this trend line, we'll be looking around 1900. So that would be your next obvious area there for gold futures. For silver, silver continuing up. So it got through that 24 handle, and now the 25 handle is going to be resistance here. We'll see what kind of pattern this puts in. But silver up another 1.4% on the day. Platinum, I think, has bottomed. So I believe platinum has put in a low here. I would be a buyer on any pullback of this. So I do like platinum in this area. Would love to get some type of dip or pullback, or even just a nice flag pattern here. But I do like the setup here on platinum to go higher, and possibly even palladium as well. I know I've been talking about this level for a long time, like going back to probably June. And we finally got there. I want to see the monthly close too. If this can put in a nice tail candle, which it's very close to doing right now into that 200 moving average on the monthly. That could be a possible long-term level here on palladium, but I want to see what that monthly close looks like later this week. And then copper had a nice pop last week as well, and now just kind of consolidating from that move. We did close the week above that breakdown bar, so that's a positive there for copper. I will give it the upside bias right now. I'll just say it'll 390 right here. Again, it's got to get through this downsloping trend line here, and right now it's consolidating, so no real problems. But maybe copper can have one more push up here towards that 390, 395 area. But again, the big picture here for me, I still think this wants to have one more drop in it. But right now, the chart's saying that it can go higher, and I'm going to respect that until proven otherwise. All right, Bitcoin here, still holding up, right? So just a little bit of a pullback here. This pattern is not, there's nothing really wrong here. There's lots of noise with Binance and so on and so forth. But right now, there's no real problems with the pattern here. And the weekly, same thing as well. I still think this can get to 40,000. My only issue with it is on the monthly. I still think that top Bollinger Band is kind of a little bit of a roadblock. So just be aware of that right now. But, it's holding up okay. And if it consolidates, it'll go higher. It's really just that simple. I don't have any sort of sell signal on it at the moment. And again, it's hanging in there okay. Again, I think it's going to be holding up probably until we get ETF news. And we'll kind of go from there. So anyways, so again, lastly, the spiders here. Just take a look here at the SPX. So we're just kind of stuck here against this trend line right now. Again, if we start to fade and pull back, you really got to get through 4,500 area, and then this green bar low. If you get a close below that, that's going to take us down to 4,400. That's going to be a big level there, and then a lot more around 4350. That's if we even get there. Obviously, past that on the upside, you got the gap fill here at 4576, and then the obvious level is your double top. That would be your next big line in the sand. Anyways, guys, kind of wrapped up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. Talk to you guys all next week.